corporate inertia, lying, sometimes desperate attempts to catch up with disruptors. These are things that we talk about sort of more tangentially because we focus more on the disruptors like Tesla. This episode is dedicated to the others, to the disrupted. And I just want to reiterate our thesis with Tesla and our expectations that in the near future we will see massive appreciation of the market cap of Tesla. And I want to support this argument actually with statements from GM and Ford, or actually ex-Ford CEO. Mark Fields, CEO, and GM CEO Mary Barra both made statements in the last few days which reiterate the thesis and just show how disrupted companies act or how disruption works in either case. This is a Not Even Wrong podcast. It's October 28th, 2021. This is Crim Telco. For the day, the fund is up 4.5%. The market is up 70 basis points since the last update. We are up 42.7%. The market's up 19.7%. We're outperforming by 23%. The main outperformance is driven by Tesla. Our other positions are Bitcoin, which is down about 1% since inception, and the biotech index. The remaining biotech index is up about 7% since inception. We did sell some, so since inception, the biotech index has probably contributed more like 5%. And then we lost money on Intel and RTX, about 1% combined. So now let's talk about the statements and then put them in context with disruption. So let's start with Mark Fields. I think Mark Fields, case study, he was CEO of Ford. Now he's CEO of Hertz, just installed. Hertz was in bankruptcy. It's a car rental company. And Mark Fields has a mission that I didn't even know, but he seems to want to iterate around electric cars, robotaxis, and the whole software suite that comes with robots on wheels. That is what Tesla is selling. So he wants to iterate around that. He made a few statements about that in the last few days. Most recently, yesterday, he said that he thinks that the learning process by which they will be able to rent out electric cars, not just, let's say, to customers, but also to businesses such as Uber, etc., that is part of the thesis of Hertz. Then we also have the potential to do business with software. So, for example, you can rent out full self-driving suite. You can have a much better insurance package because you have data available. So there's a lot of things that they can iterate around, and we spoke about this last Monday and Tuesday when the big move came after the news of Hertz. I think the big potential for Tesla here is the business iteration that is possible with this Hertz deal. So it opens the door for a whole new business model, a whole new way of making money as a car company, as a software company. I think that's the main potential that we see at Orange Capital Partners here, and we're pretty excited. And I think it's important to note that Mark Fields, before as Ford CEO, was fairly reluctant to make statements that clearly separate Tesla from the pack. Now as Hertz CEO, he has an incentive to actually do that, and he did it. So I think it's a statement that is more important than maybe most people see, because this is really an admission. In the end, this is an admission by a former car CEO that Tesla is a dominant player in the future of electric mobility, intelligent cars, etc. This is the fundamentals of the statement, and I think it's strong because it's coming from a party that we wouldn't have expected. This is the thing. This is coming from an ex-Ford CEO. This is not coming from a Tesla fanatic fan or something like that. And I think we wanna remember this. October 28, 2021. This statement, maybe a year or two hence, when Tesla has a market cap of $3 trillion and is the largest company in the world, we will remember those statements and see that this was reiteration of a thesis that a lot of people still have trouble wrapping their heads around. Now, this is an example of how disruption works. So it's iteration, it's learning, it's accepting the inevitable, that fundamentally new concepts and engineering practices through the lowering of cost of iteration actually lead to disruption. This is what Mark Fields is actually doing. Now, the other example, Mari Barra, is the exact opposite. It's orthogonal to everything I just said. This is the disruptee, or the disrupted. I don't know what the accent. So the company which is being disrupted. This is what Mari Barra is as CEO of GM. GM is being disrupted. What does that mean? That means that the cost structure of Tesla is already much lower than GM's, but much more importantly, the rapid pace of innovation and rapid pace of iteration makes it impossible for Mari Barra to compete with this company. So what is she doing? She goes public and threatens that within the next 3 years, she will catch up with Tesla. By the way, she's not the first one to do that. Herbert Diess did that with Volkswagen also. You know, you can argue in many ways about this. Rallying the troops, motivating the troops, blah, blah, blah. It really makes no difference to us at Orange Capital Partners because it means one thing. Mari Barra is lying. By the way, she's even deceiving investors here, so this could be even an SEC investigation. And I just want to remind certain people at the SEC that spent a lot of resources of attacking Elon Musk. Maybe they should think about this more specifically, because here's, I'm now quoting Rob Maurer from the Tesla Daily podcast. He says that the plans of GM, as stated today, would mean that they cannot catch up with Tesla in the EV market. Now, if that's true, that means that Mari Barra is lying, or she's oblivious. In the first case, she would be liable for not following her fiduciary duty, and in the second case, she would be probably indemnified, because you can't blame somebody for lack of capability or in plain English, stupidity. But of course, there is a lot of corporate jargon here. And let's say come to 2025 and Tesla is doing a couple of million cars, way more than GM. She will be asked, well, didn't you say you're going to catch up? She'll say, well, I meant as a whole. As a whole, we still have more market share. And in the segment XYZ, for example, in the SUV segment, we are actually gaining market share. And this is really what we care about. And that's what we meant. So she will be able to wiggle herself out. I still think that it would be worth an SEC investigation just today to clarify that. So she has to be forced to clarify through a press release what she actually means. Because as an investor at GM, I am now thinking, well, listen, if you want to catch up with Tesla, then I need to give you more valuation. This is the problem, and I think this is part of the reason why she's doing all this. Now, having said that, I don't want to go into this SEC conversation, actually. This is not my job. What my job is here at Orange Capital Partners is to generate wealth by investing in fundamentally new concepts and engineering practices. We build our investment thesis on principles, and part of the principle is related to disruption, and that's what this is all about. Because what Mari Barra is doing is the typical thing that disrupted companies are doing. She is denying, she's lying, she is at best maybe not capable of understanding what's going on, and probably she's smart enough and she really is lying. Now, why is she doing that? For several reasons. Number one, of course, she wants to keep her job. She's getting pressure on her board. What is going on? Why aren't you doing something? And she is answering with posturing, with statements of strength, and so on and so forth. Now, of course, a general in an occupied territory maybe will choose that kind of strategy to continue fighting. So I don't want to go too deep into the art of war here, but I still think that there is a difference between lifting morale and being oblivious and delusionary. This is the problem, because as an investor, as a stakeholder in GM, I'm following her statement and I'm comfortable with what's going on, and then come 2025, I'll be the Nokia of the car industry. By the way, the reason I'm thinking that is going to happen is not just because I am a very stout believer in Tesla, but also the market is pricing it like that. Because if the market thought that GM has a chance here, then the valuation gap between GM and Tesla wouldn't be as high. Now let's list the reasons why we believe that that GM cannot catch up with Tesla. And most importantly, it's the iteration around producing at scale intelligent robots. This is a very difficult thing to do. I mean, Musk has said it so many times. You can produce internal combustion engine cars, but producing intelligent electric cars is a whole different business. I mean, this is like saying GM should be able to produce chips, like computer chips. They can't do that. So that's number one. Number two, we believe that GM also has a legacy business to deal with, that just listening to these types of statements and let's looking at the volumes and the plans that GM has in place are showing us that they don't take this very seriously, that they still believe that they can smoothly transition from internal combustion engine to electric, when in fact that's not going to work. They have to do it radically. They have to close down the internal combustion engine business and fully commit to the electric car business. And they're not doing it the same way, by the way. Volkswagen is not doing it and everybody else is not doing it. And unfortunately, there's no other way. That's why the real competition, in our view, is not coming from GM or anybody else, but from the Chinese and some other companies, maybe like Lucid, companies that are pure play, that have all the resources and all the iteration that is happening within the company is around this new electric intelligent car. By the way, most of these companies are in the electric car business. They're not even in the intelligent car business. This is really only Tesla right now, and maybe a little bit GM with Cruise, but we don't know what she has down her sleeves. Maybe there is something with Cruise that we don't know. I don't want to put words in her mouth. I just don't see it right now. I see what Tesla is doing, and I can only extrapolate from where from where I am today. It's my best guess. I can say that Tesla, through iterating around FSD and the way they're doing it, is going to win this race, unless we see some radical change, either by the companies or maybe, and this is just a maybe, this is a third point I want to make, maybe Mary Barra knows something that we don't know about political things, that maybe she has a deal with the Biden administration to slow Tesla down and punish them for something they did or whatever, and then gain some time. Maybe that's what's going on. I'm like I said, I think the biggest risk in the Tesla thesis is actually the government and the Biden administration and the stronghold of the unions that, of course, Mary Barra on the one hand is also a victim of, but on the other hand, of course, she'd rather take the unions and the Biden administration than being basically put out of business by Tesla. So to summarize, the statements of Mary Barra are typical statements that you hear from CEOs that are being disrupted. That it is delusional, it is to some extent lying and misrepresenting situations, so it's an SEC problem. But from an investment perspective, it's first and foremost a situation where, as a GM shareholder, you have to absolutely be prepared for a complete collapse of the car business, a complete collapse also of the residual value business that GM is either directly or indirectly part of for internal combustion engines. So these are all risks that are not being addressed. Instead, Mary Barra is posturing. And again, this is not meant to be a critique now to GM. I don't care, I'm not a shareholder. I'm just using her statements to reiterate our Tesla thesis. This is the purpose of this podcast. And the other thing I mentioned is what Mike Field said. He now is a former CEO of a car company, Ford, that is now a CEO of Hertz, which is a new type of rental car company. They came out of bankruptcy and all that. And I think Fields has all the incentive in the world to strengthen his position around this new space, which is intelligent electric cars. And he said it actually yesterday. We want to iterate, we want to gain knowledge and hopefully build them out around this new type of business. It's not just renting out cars, it's also renting out software. It is dealing with new types of insurance products. So the whole suite, which we also think is a big upside for Tesla, is also an upside. And we're hearing it from an external person now, not a person within Tesla or a Tesla Mark, CEO of Hertz. And that should reiterate also the thesis around Tesla being a winner in this space because of the lower cost of iteration. It's always about that. here at Orange Capital Partners, we define the rate of disruption is inversely correlated to the cost of iteration. So the lower the cost of iteration, the higher the rate of disruption. And this is exactly what's going on with Tesla. Thank you.